Hello and welcome to the Quarter 2 2025 review on what's happening in the economy and the markets. Before we start, there will be a podcast episode where I review this with Sierra, my wife. You can check that out via the link in the description. We actually started a podcast called Plain English Finance. You can listen on all the major providers, including Apple Podcasts and Spotify. It's something we've talked about for a while, and now we have finally done it. It's weekly episodes for now, and it's designed to be shared. So have a listen. And if you learn something, please share it with someone you think would appreciate learning about how to make high quality decisions when it comes to personal finance. Okay, let's get into the review. So, first up, let's talk about the elephant in the room: trade. Right now, Canada and the US, well, I should say Canada and the US and everybody else are having some serious disagreements, should we say, about trade. Recently, the US made it more expensive for Canada to sell its goods there by adding extra fees called tariffs. They increased the tariffs to a variety of ranges from 25% to 10% on a wide range of things that America typically buys from Canada, like oil and gas. And Canada responded by doing the same thing to US goods. And since then, it's just been an escalation. I think as of this recording, the last threat was 35% on everything. But honestly, it changes every single day. So nobody really knows what's going to happen because this plays a big part. But why does this actually matter? Well, these costs make products more expensive for everybody. It hurts businesses on both sides, and it has the potential to slow down the economy. To reduce this reliance on the US, Canada is now looking to trade with other countries. And very importantly, progress seems to have been being made. And that's been reflected in the optimism of the financial markets. What about how is Canada's economy actually doing? Well, the start of this year, the economy started off really strong, but it did slow down in recent months because of these trade problems. At the same time, inflation, which is how quickly prices are rising, is still pretty high, higher than we would like. And that means that everyday things from groceries to clothes are costing us more. You've probably felt that yourself. But something to note: if inflation goes down, it doesn't mean prices will fall. It means prices will rise slower. It is unlikely that the cost of living will get cheaper. It seems that popular opinion thinks that this is something that will improve, which sounds great, but I don't think is very realistic. This is the new reality that we're dealing with. I'm just hoping that it doesn't get much worse and that the people that haven't invested, haven't been keeping up with inflation, don't get left too far behind. The Bank of Canada, which sets interest rates, think of this as how much it costs to borrow money. They kept interest rates steady. They're worried that prices are rising too fast, inflation, but they also don't want to slow down the economy too much. And dropping interest rates would stimulate things. So if it keeps getting worse, it's likely that they will lower interest rates. And how has this impacted the stock market? Well, as I said, despite these challenges, the stock market, the Canadian one, has done great. We're up about 8.5%. Investors are optimistic despite all these issues, especially in sectors like technology, consumer goods, or industries. They did really well. But common theme: real estate has struggled, largely due to the unknown about interest rates. Globally, the US stock market has also improved, especially tech. Europe and Asia has also had solid growth. They're up about 6.5% each. And even emerging markets have done well, which are countries that are still developing their economies, like India, Taiwan, and Brazil. They also did well, which is good. A word of caution, though: the US market is expensive when looking at historic valuations. A quick reminder that stock market returns can be attributed to a few different things. Most commonly, we use multiple expansion, earnings growth, dividends, and currency. A large part of the return year to date has been caused by multiple expansion. or people willing to pay more for it. This doesn't make me too confident, and it does leave room for negative events to bring that back down. To learn more about that, I'm not going to go into that now, but check out the podcast episode. Another major thing that's happening now is politics. So Canada, we recently held the election and a new government was formed. Mark Carney came into power. It is a minority government, meaning that they'll need support from other parties to pass laws, which can slow things down. So there was some general concerns at first, but so far it seems like differences are being put aside for the common good, which when it comes to politics, people getting on is always a good thing to a degree. The biggest takeaway this quarter, though, is it's obviously going to be the trade war with the US. These issues are important because they affect our economy, prices, how Canada interacts with other countries, which I actually think long term looks pretty optimistic. Markets are up, and I'm cautiously optimistic for the medium term future. But remember that downs are normal. And especially in an expensive market, bad news will come with sharp movements. None of which, though, are a reason to deviate from the plan and let emotion cloud our judgment. The markets are not the economy, and the economy are not the markets. Oftentimes, the markets are what we call a leading indicator of the economy, which means that by the time the economy recovers from a recession, the markets have already moved on. They've already started to worry about something else, which is even more reason to make sure that we don't panic and we stick to the long-term plan. As always, if you have any concerns or any questions, please feel free to reach out to me. And remember, go check out the podcast. If you like what you see, if you give me some feedback, send it to a friend, send it to family, and I'll see you in the next one. Bye.